SoFi is up 20% this month after releasing their second quarter earnings. And Wall Street? Well, they still call it a hold. Net income just exploded 459% year over year, and EPS up 700%. They're adding nearly 1 million users per quarter. And yet, most people have no clue what's really fueling this company. My name is Rick Orford. I've been trading since 1999, and I am not a financial advisor. And that is a good thing, because I'm not here to sell you some cookie cutter ETF or some dream fantasy. No, I break down the numbers so retail investors can actually have a chance in this market. And with SoFi, there's one thing that almost everyone is overlooking. The company is building what Apple calls a digital walled garden, and it's working. But there's a problem. The valuation is sky high. The crypto comeback's still a maybe, and interest rates, well, they're not helping anything. So what's the truth behind SoFi? Is this a fintech rocket ship or a hype trap waiting to implode? Well, let's get right on into it. SoFi Technologies is a one-stop shop for digital financial services that helps folks manage their finances within 3 main segments. Its first segment is lending, which covers personal loans, student loans, home loans, and other related services. The second is their technology platform, which provides a complete transaction system, including credit application and approval. The third segment is financial services, which includes products like SoFi Money and SoFi Invest. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/RickO to get your 10 stock picks right now. So you could say that SoFi supports the full transaction lifecycle, allowing its members to make financial decisions like borrowing, saving, spending, investing, all in one place. Now, let's talk about the stock. If you want to follow along, just scan this QR code. Now, SoFi stock is up 20% over the past month. However, a consensus among Wall Street analysts say it's a hold, highlighting that mixed signals of tempered enthusiasm despite the strong growth story. SoFi just released their second quarter financials with net revenue coming in at $854 million, which was up 43% from the same quarter last year. Net income also skyrocketed 459% to $97 million compared to the same period last year. And that translates to a diluted EPS of 8 cents a share. And that's up 700% in just 1 year. So how on earth did this happen? Well, its product and member growth are both up 34%. And this is what you want to see in a growing company like SoFi. SoFi added 850,000 new members last quarter alone, thanks to SoFi's rapid expansion and effective cross-selling within its ecosystem. And this approach is quite similar to what Apple's walled garden strategy is. I believe these growth figures show how well SoFi is capitalizing on this digital-first model. At its current trajectory, SoFi investors are potentially looking at a massive boost. First, SoFi is expected to grow as it expands its access to alternative investments. SoFi's investment opportunities include private equity, venture capital, private credit, and real estate, which enables its members to build a diversified portfolio. Now, through partnerships like Cashmere, Fundrise, and Liberty Street Advisors, the company is expanding into private markets. And I think this move opens up alternative investments to a new generation of investors. Next, the second catalyst is SoFi's comeback to cryptocurrency and blockchain technology. SoFi paused its cryptocurrency services in 2023 as part of its compliance with federal regulations tied to its national bank charter. But they weren't getting out of crypto. Rather, it was a regulatory necessity, as nationally chartered banks faced tight restrictions on crypto-related activities at the time. Now, SoFi is looking at re-entering the crypto space with the OCC's new guidance that allows banks to now offer crypto custody, stablecoin services, and other digital asset capabilities under specific conditions. And this positions SoFi at the crossroads of fintech and crypto. Now, SoFi isn't quite there yet, but I think this is the perfect time for SoFi to make its comeback by offering cryptocurrency. The market is showing bullish momentum with rising market cap and user growth. On top of that, U.S. government is taking a more constructive stance on crypto through the Genius Law, along with the Stable and Clarity Acts currently moving through Congress. And if all goes according to plan, SoFi will be well positioned to capture the broader shift towards digital finance. Of course, the third reason that can propel SoFi is its multi-billion-dollar agreements with Blue Owl to help fund SoFi's future loans. Let me explain. SoFi Technologies has secured its largest loan platform business agreement through a $5 billion investment from Blue Owl Capital. And this is a leading asset manager with over $250 billion in assets under management. And this allows SoFi to grow its business without taking on credit risk and brings in steady, risk-free income. And I think it's a very smart, capital-light way to scale, which is good for SoFi's long-term growth strategy. And this is something we often talk about on my Discord channel. Let me give you an example. Think about the bank that you use every single day. Chances are it's the same one you've been a customer at for years, maybe even since college. And why is that? Well, it's habit and trust. SoFi knows this, and they know that when someone opens a checking account, takes out a loan, or invests on their platform, they're likely to stick around. And that's the digital loyalty loop that SoFi's building, and it's powerful. Now, for all the excitement about SoFi, the road to success isn't straight up. First, its cryptocurrency comeback may be a bit late. One thing about cryptocurrency is that it's extremely volatile. Its gains are attractive and unmatched, yes, but it's not always the case. And SoFi recognizes this and stated on their website that cryptocurrency purchases should not be made with funds drawn from financial products including student loans, personal loans, mortgage refinancing, retirement funds, or traditional investments. And I think that's absolutely great advice. Next, let's talk about interest rates, right? Because when interest rates rise, borrowing becomes much more expensive, which can slow demand for loans, which is a big part of SoFi's business. It also raises the risk of loan defaults, as borrowers may struggle with higher payments, and that could lead to potential losses. Plus, higher rates often shift investors towards bonds, which can weigh on SoFi's stock. Now, comparing SoFi Technologies' forward price to earnings to its peers, well, SoFi still isn't one of the bigger players like Ally or Synchrony, but that could be a good thing for investors like you. SoFi trades at almost 68 times forward earnings, while its peers sit between 6.8 and 10.7. Even the broader financial sector trades much lower. For new investors, forward PE shows how much the market is willing to pay today for $1 of the expected earnings in the next 12 months. And trailing PE is the reverse. It tells us the multiple of the last 12 months. Regardless, if it's the trailing or forward PE, it gives us a glimpse of how much investors are willing to pay for growth. Now, with that in mind, a comparison of SoFi to traditional banks doesn't give the full picture because it's still a young, growing, fast-growing company, and higher valuations tend to come with newer companies. Now, if you're a growth investor that's looking for a fintech play, then SoFi could be a great addition to your portfolio. But I'd only be using risk capital, right? It could mean that you're looking at buying stocks, but maybe only 1 to 2% of your portfolio should ever be allocated to these kind of investments. But I see SoFi as being one of the most exciting growth stories because it taps both traditional and the cryptocurrency markets. And this is where execution matters. But what about you? Are you buying into SoFi's vision in 2025, or are you avoiding them? Let me know in the comments below. And of course, if you found this video helpful, consider giving it a like or subscribing to the channel for more. Thank you so much for watching, and I'll see you next time.